The data and the charts that have accurately predicted the last 8 months of this bull cycle is telling us what is about to come in the next few months. And in today's video, I am going to present that to you. A lot of this is actually going to be going against what most people are predicting based on feeling or intuition. So I want you to pay attention, because if you're like me and haven't got those final positions in, this very well might be the most important video you watch all year to take advantage of what comes next. Now, let's address the elephant in the room before we continue. Guys, I am, of course, in my new setup. It's a little bit scuffed right now. I have one light, I have an old camera, and of course, I'm holding my microphone. Things are going to be changing here over the next few weeks, but I'm moving into the setup. So look, if you enjoy the standing difference rather than sitting, if you like the background, if you like how I present this video, of course, it's going to improve. It's going to be a little bit slowed down because I'm holding a microphone. I can only do so much with 2 hands. Let me know with a like on the video or a comment. Of course, I will go ahead and read those and improve to make sure that you have the best experience as a viewer. So with that being said, guys, make sure you do like the video if you do enjoy or learn something new, and subscribe so you can achieve your crypto goals. So I'm not too sure if you're familiar with how crypto works or how Bitcoin even works at that, but every 4 years, Bitcoin's halves. The reward that Bitcoin gives all the people securing the network literally drops off by half at a period of time, okay? And this creates scarcity, which means the price will go up in the coming months to the next 1.5 to 2 years. But right now, we're about 60 days before that typical event, which has a lot of people believing that we are going to have a crash initially after the halving, which is actually what happens. And I'm going to explain to you momentarily here why that happens and if that's actually going to be true or not this time around. And why that's important is because if we can kind of have a good idea of what will come very, very soon, we can take advantage. It's as simple as that. If you're an oracle and know what's going to happen in the future, you are, of course, going to make money or do whatever you want to your advantage, okay? Now, to start things off, I've got to give you an insight here with the data, and this is going to give us almost an oracle view into what might happen over the next coming months here, because this chart you're seeing on your screen right now has accurately predicted everything over the last 7 or 8 months, since July last year. So let me explain to you, there's 2 main things that I believe it has predicted so far. First of all, it hasn't actually come to fruition yet, but I do firmly believe this is going to predict the top of the cycle around Q4 of 2025, okay? Because it's built on data, and I would love to go into it with you. I'm only got one free hand here, so I can't really draw as well as I'd like to typically, but in this case, it's all built on the last 2 cycles and how they've exactly come to the day from halving to top, right? And built on more than just that, of course, we also look towards the top, towards the halving, and all these different sort of metrics. And it's given us, roughly speaking, around late October to around early December will be the tipping point. And I made a video a few days ago going over how, what you can look at for a few different triggers to get out of the market at that point. But this video is going to touch on more so about the next few months here. And what I kind of want to also point you towards is this actually predicted when the bull run, so to speak, was starting. Now, this ultimately said the markets should start in around December 2023. Now, I'm going to show you and play a clip in a second here of a video that I recorded in July touching on this chart, where I actually said August to September was going to be the point in time in which the demand would really start picking up for the bull run. Everyone called me crazy. Kyron, you're BSing. Stop saying this. The bull run doesn't start to the halving. But it really did. As we all know, October, things actually started to pick up. And again, this all built on this data. So the data essentially said it was just very easy, right? I'm kind of not even trying to tell you all I know what's happening next. I'm just analyzing the data and being the person who brings you it, right? I'm just a messenger. And so 14 months before the halving towards 8 months before the halving, we typically see a slight increase in demand and a major uptick in demand between these 2 points in time. Now, while the volume in this case doesn't really mean positive buy pressure, it does mean an inflow of interest in crypto in general. We also saw in the last cycle as well, so that was 2018 back over here. This is the last cycle just gone from 2020 to about 2021, and 14 months before and 8 months before, again, just like clockwork, things started to pick up. Yes, we are technically, at least back then, were here and we're about over here right now in the current time, or that was a horrible drawing over here, okay? And so back then, again, I kind of predicted we'd roughly see this pick up in about August to September, and I'm going to play you this exact clip here. Now, this was about 2 videos I made in July, and the first one here, I literally said August to September is when we'll see demand start to pick up. But this one I want to play you here. It's a minute and a half of your time. Trust me, it's going to be well spent. Goes over what actually I predict even more based on this information. So I'm going to play that for you guys now. Pay attention. Guys, this next period here that I have in black, the next 4 weeks is going to really be a differentiating time for crypto and the bull market. They might be thinking, Kyron, who cares, man? Like, why is this big news? Why do we really have to give 2 craps about whether the bull market starts, in the next 4 weeks or the next 3 months? Well, again, it's an integral time for us as investors to put our final positions in. We don't want to obviously be buying when prices have gone up 10, 20%. We don't want to be buying, obviously, near the peaks. We want to be buying at the troughs, right? We want to be buying when it's the cheapest possible price. And luckily for us, crypto obviously is pumping a little bit right now. I think it'll definitely start to peel off a little bit, ideally. And then if you do have any more positions to put in, this is an integral time to do so. And saying that, you do want to have some cash on the side. One thing I found in the last bull market was it really annoyed me when we've had dips and I couldn't just buy more tokens, or of course, there is a substantial chance we see a black swan event happen. We don't know what is happening behind the scenes. The big fish seem to always have a plan. And for us, the small guys, the surface level stuff tends to be the false narrative. So I want to make that very clear. There's always a hidden agenda happening behind the scenes. So I think having a minimum of 10% of your portfolio in cash is a very good thing to have. Now, if, for example, the bull market takes off and the next 4 weeks is that's it, right? The demand starts picking up. We never see our favorite projects at the prices they are right now, which could definitely happen is what I might suspect here. And I was right. It did happen. Maybe it took an extra few weeks or a month than I expected, but things actually did that. ICP went from $2.90 all the way up to $15. Chainlink went from about $5 or $7 at its height all the way up to, again, about $15. Like, these projects most definitely did peak from this point. They didn't just slowly start moving up. They went instantly from nothing to hero, at least in the next 2 months max. And so when this starts to pick up, guess what's going to happen, guys? You're going to end up wishing that you had some cash in the bull market, because that is when we can find these 100x to 1000x plays. So yeah, all I'm trying to really say in this case is, one, that demand was going to pick up back then, which of course it did. And again, I'm not trying to brag here. It's literally just the data. I just read even the most basic of, things that was shown to me and then told you about them. And of course, they're coming true. Now, you might argue, you might say, Kyron, well, hey man, what's to say that things are going to change? How do you know that things are going to remain the same? Well, I don't. But we can use what's happened in the past. Again, all of this, which, mind you, eerily plays out. It doesn't even rhyme. It repeats. It literally repeats to the day. 548 days from halving to the top, the last 2 cycles. Now, again, we can disregard this, and I probably would. I'd give it about a month or 2, maybe even a quarter, so 3 months of buffer room. But again, it's telling us, roughly speaking, even when demand picked up this time around, yes, it might have been from the ETFs, but things, doesn't matter what's caused them, are working like clockwork. There's no refuting that statement, okay? So please pay attention. And obviously, some of the things that I've mentioned here have played out, and are likely will to play out. So let's see what happens over the next few months here with this halving. So first of all, you got to ask yourself, why does a halving even happen, okay? Now, a halving happens, Bitcoin is built into the protocol that literally the rewards created from Bitcoin are halved literally on the day. So all the computational power, all the resources, all the electricity, all the hard work these people buying these expensive Bitcoin mining machines do and put into the network to secure it, their reward for doing all that is literally halved immediately. So what tends to happen is, as we'll see in a second, some of the smaller guys, some of the smaller miners, like people like friend groups or even small institutional mining pools, they sometimes have to close down temporarily to prevent themselves from, of course, losing money, which I don't know if you guys know this or not, but has caused these retracements on the halving, which is what a lot of people are expecting now, which actually, I'm going to probably scare some of you in this case, might not happen this time around, which is why, as you see the halving here, which is why I've drawn this potential dip and crash over here, because that's what happens. Sometimes it takes about a month or a few weeks to really come down, but it gives people typically, as we can see in the last few cycles, a good chance to get in. So 2013 cycle is in the blue line over here, and you can see the halving happened here, and it fell, right? It fell quite substantially. The green line is the last cycle, 2017 cycle. And as you can see, after the halving number 3, it did drop as well. It looks insignificant, but of course, that dip right there gives you a pretty good chance to get into some of these altcoins at a good price. Now, like these guys I'm stealing this chart from here, Van Eck, these guys are an asset manager with about $100 billion in AUM. They have also said in their report that they predict that this won't actually happen this time around. And I actually will agree with them. So I'm going to leave this particular document right here available to everyone in the Discord. It's free to join, by the way. Discord link down below under the Miro board section, because as you know, I'm having a bit of a hard time here trying to draw and really show you what I'm talking about here. So if you want to have a look at this chart and kind of visualize it for yourself, I'm going to give it to you. But a lot of these big mining farms, right? And also the small ones, again, like the ones family, friends, maybe yourself set up, or maybe it is a very small, institutional created mining pool. These guys are a lot more in the black, meaning that they have a lot more capital or Bitcoin cash, particularly to sustain themselves over a period of time, so that if Bitcoin does slightly dip because of the halving, if some people decide to sell based on historical information, that they're going to be able to weather the storm. They will be able to keep their electricity costs paid or electricity bill paid. They will be able to continue paying the rent. They will be able to do these things in these areas, because I don't know if you will know, but these Bitcoin miners are very, very not just loud and produce a lot of heat, but they suck up a lot of electricity. There's a lot of electricity costs and a lot of overhead with these mining pools and farms. So in this case, the small miners typically will have to sell some of their Bitcoin, because all of the Bitcoin they've been accumulating over the last few years in the bear market, well, if Bitcoin's price falls below the price where they're actually being profitable from mining, because these guys aren't mining 6 Bitcoin at a time, these guys are mining a small percentage of the bigger mining pool they're in, whatever their rewards are. And so they get the breadcrumbs, right? They get the small little cookie pieces. And so what this ultimately means is that they have to sell their Bitcoin on the open market to stay above water, if they don't have cash, of course, to support them. And this often leads to a situation where the price dips even more. And then you have the big guys who were in the black at that point in time begin to sell as well, because they cannot sustain their profit margins either. But again, in this case, Van Eck, those asset managers, and myself, I'm predicting that, guys, when we think about it, right, Bitcoin's been around now, or at least mainstream, somewhat popular, at least 4 years. Some of these mining pools have been going on for 8 years, right? And so in the last cycle, yes, you could argue that a lot of them, might have had to sell some of their Bitcoin because they weren't around for 4 or 8 years. But this time it's different. These guys are seasoned. They've been around for quite a long time. And so I do believe that they're not going to sell their Bitcoin on the open market. And likely they have been in anticipation, and then, of course, have some cash on the side instead. So this is one of the many reasons why, again, Bitcoin crashes within a month or two after the halving. But again, based on this information, I'm really not starting to think it's going to happen. So this is what I want to warn you all about. For those of you who don't have your final positions in, for those of you waiting for this, I'm not saying it is going to not happen. I'm just saying be prepared for it not to happen. Be prepared for the price to actually start increasing pretty immediately after, maybe not instantly, but within the first week or two, okay? Now, there is an argument to say against this, right? So this chart over here from BitBo basically takes the last cycle and plots it onto the next 4 years. And so far, this damn thing's pretty crazy. It's accurately predicted the price of Bitcoin from the last cycle, again, plotted to this cycle. And of course, what came next? Well, the COVID crash happened. So I don't think this is necessarily going to happen, because that was a bit of a black swan event. That wasn't really programmed into Bitcoin. But again, wouldn't surprise me to see, based on the data, based on the, again, previous 4 years before the last cycle, that we might see something, of course, happen in the next month or two, of course, around April, when the halving does happen. So if I were you, I would just keep your finger on the pulse. But if you're asking me, if I'm analyzing the data and analyzing what these Bitcoin miners are looking like right now, it's kind of conflicting, right? The data says we are due for a potential retracement. However, of course, the miners are a lot more profitable. Now, guys, I don't know if you know this or not, but crypto is a propaganda, run machine. It only takes 1 or 2 articles, maybe even illicitly created from being paid off by some of these big corporations, to then spur up a lot of this kind of fear at the right time, right? At the time of the halving, which will, of course, cause Bitcoin to actually crash, 1 or 2 months or a few weeks after the halving. So I'm kind of going back and forth. If you're kind of a bit confused right now, thinking to yourself, well, what is his thoughts? My thoughts are we're not going to really have too much of a dip. I don't think we're going to have these institutions really trying to run the price down. But again, it wouldn't surprise me based on the data. Now, I know a lot of you, based on this recent poll, are actually a lot in crypto right now, which I probably do say would firmly believe that you might actually be on the nail over here, okay? Some of you are actually in 100% cash, so 6%. I think this poll got like 8 or 9,000 votes, so this is a pretty good sample size. I think those of you who are in this category over here might be, or somewhere in between, might be in the best position, but I don't think that, if you guys are 100% in cash right now, not financial advice, none of this is financial advice, of course, maybe look to just take advantage, because if there is going to be a black swan event, it's got to come over the next few months. And if it doesn't, the next sort of best bet you have is probably the 2024 election cycle, which even if we have a black swan at that point, might not even get you to the prices we see today. So what would I say to do? Well, I've always said again, and what I just mentioned moments ago, is I think 70% crypto or 10% above or below that, and 30% cash, again, 10% above or below is probably the best. So again, between 60% in crypto, right up to about 80% in crypto, I believe is probably the sweet spot. Again, not financial advice. I'm not telling you what to do here. This is very generalized information. And the reason being is because if you were to close your eyes and pick even Bitcoin, Ethereum, you're likely going to 5x from today's prices. If you buy the top 3 to 10 altcoins, you're likely to 10x. Top 11 to 61 altcoins, it's a 20x on, again, average, and top 200 likely to somewhere around 30x. So if you buy right now, if you're more on crypto, you're going to make money. You're going to walk out the cycle as long as you have an exit plan and you're going to be happy. Whereas if you're more in cash, yes, if we crash, you'll just simply have a really good discount to buy, altcoins. I don't think we'll fall 50% on a potential crash on the halving. It's likely going to be around about 10% correction, I think, at worst, unless the big boys come in and manipulate things, of course. And if you don't decide, or if you do decide rather to have too much cash, you risk buying at huge markups, even again if the election turns out really bad, and for crypto at least, and the price does tank in November/December. And so with that being said, guys, one point I want to make here, and again, excuse this, I wanted to show this on TradingView, but I'm in a different setup, so I really can't. Look at the 200-day moving average, okay? So go to Bitcoin and look at the 200-day moving average. It's very simple to do. Just Google it if you need to. And if we break beneath that and sustain that around the time of the halving over here, so the halving is going to happen anywhere between these 2 points in April-ish, and if it sustains beneath that 200-day moving average post-halving around 1 month, that actually might be a good indication for you guys in cash to then look to inject some capital, again, non-financial advice. Now, that's only if it sustains beneath. I think if we go beneath, it would be probably a pretty wise decision to think about what happens if we go back above and then continue to gain above, because it's only if it sustains beneath this point or the moving average here that we really start to see a change in trend, which I don't think we will. I think the bull run's already been kicking off since back in October of last year. So here's what I would do if you guys are looking to get into some altcoins. This is the information I've been telling people in the private community as well. And it's that if you're looking to, fill 2 more positions or 3 more positions, or you're looking at 3 different altcoins, 5 different altcoins, double that per altcoin. So look at 2 more alternatives for each altcoin. So if you're looking at 2 altcoins like I am right now, Pith and Manta Network, so layer 2 rather, and an Oracle, you got to find 2 other Oracles and 2 other layer 2s similar in market cap to possibly get into if they crash more than your desired project. So how this might look on coin market cap is if you're looking at a layer 1 like Cardano and also an Oracle, you got to find 2 other layer 1s and 2 other Oracles to kind of, or Oracle-ish quant, to fill that position just in case it doesn't hit your entry point, right? And the way in which you figure out your entry point, there's 6 steps. 1, find a price prediction like I've got for you all over here. So mark the price prediction over at $230. I've got all this. If you want price predictions, by the way, join my private community. Not telling you to do that. Level 2 is what you want to do for these 100 predictions. And then look at number 2, pulling it down 25%. That will also be displayed in these price prediction sheets on the private community. That is your actual level you're looking to actually get out of, because the price prediction, for those who don't know, this number up here is the best Mickey Mouse case scenario that you might find the project wick and then wick back down to. So we're not counting on that price prediction as the actual level we can get out of. That's when we move down 25% and we can begin to ladder sell before this level, okay, and a little bit above it, okay? So once you do those first 2 things, assess your ROI goal. So for me, I'm looking for a 30x, and you have to actually answer to yourself, how many multiples you want. And don't be someone who says, I want 100x, I want a 30x just because. Actually put some weight behind it, right? Materialize your ROI goal. For me, I want to buy 4 to 8 properties, buy them outright, or buy, half of them, for example. And so I've worked out how much revenue that will generate me per year. And that's why I'm comfortable with, $100,000 I'm investing, how many multiples I need to get that goal. You need to materialize it. People often overlook it, because what we're going to do then is look to actually find the entry level we need to begin buying at the projects. Now, this will help you because you don't want to be buying projects just because they're at a decent price or someone influencer is telling you to. If you start buying Chainlink now and you're looking for a 30x, you ain't going to 30x. And what that will actually do is you'll end up holding your bags, post 2025 and into the next cycle, because you were still mentally thinking, oh, Chainlink's going to pump, it's going to pump, it's going to pump, but it never does, right? Because you're over ambitious. So what you're going to do now from this point in time, once you found your 25%, reduction level, is try from the current price to move up and touch that 25% level. You can see it's 800% increase, which is actually a 9x, just over a 9x. So if you buy the current price at the max realistic level you can actually ladder sell out of, you're looking at a 9x. Now, again, if you're looking for a 30x like me, all you got to do is zoom in. Again, forgive me because I'm doing all of this with one hand like an absolute pro. We're going to zoom right in, and you're going to move down to a level in which you can see this percentage over here change to 2,900%, which is of course, a 30x rather. And as you can see, I'm now moving into an area in which Chainlink pretty much has hardly ever been, even in the last 12 months. Okay, even in the whole bear market. So at this point in time, we're at about a 28x, more or less there, but we're at $5.90. So if I move down to actually achieve my goal, 29x or 30x rather, that's $5.50. So how likely is Chainlink to hit that? And mind you, if Chainlink falls to that, we will have to sell at the max realistic price level, which again, the higher you go, the more unrealistic it becomes for you to actually sell at that level, right? Chainlink might only go to $120. So we want to bring this as far down as possible whilst realistically buying in at a price that Chainlink, if we were to have a crash, can reach. Okay, and this is why it's very important for you to do this simple exercise. So for example, let's say for argument's sake, I can then bring this back up to $11 and I can look at getting my multiples. Let's say it's a 12x at this mark, in which I will move my ladder here or my price prediction sell level here and begin ladder selling from there. Now I've got many exit plan videos on my channel. I can leave the links down below for you guys, but this is how I would do it. And again, go back and try to do this for multiple projects. So if you're looking for something like Chainlink, look for 2 more Oracle plays, okay? And if you're looking for 2 Oracle plays, look for 4 more, okay? You want to double that up because again, if Chainlink doesn't hit, even if we have a crash, you're going to have other options that you might be able to buy instead. So with that said, my personal opinion, again, let me reiterate for everyone who skipped the video here, is I think we're not going to have a serious crash, but the data does say that historically we do have some sort of correction. Again, I want to point out, I think the correction won't be large unless we'll have some external market forces like these articles from Cointelegraph or other places where the big boys, the big fish come in and they actually, paint a different picture. It happens all the time in crypto. It's highly manipulated. Especially now these ETFs are out, we have bigger people involved with the market. So with that said, pay attention, take care, and again, drop a like on the video if you made it this far and you enjoy the content. Talk to you soon. Take care.